Crude oil has been on a roller coaster ride this year. There have been no shortage of catalysts, from Fed policy to inventory levels and, of course, geopolitical risks. Our next guest thinks the oil market is facing a tug of war. On one side, geopolitics and production cuts. On the other, shrinking demand out of China and record production out of the U.S. Scott Bauer, Prosper Trading CEO, here to tell us more. So, Scott, perhaps we start there.
Yes.
Who is winning the game of tug of war right now?
That's a toss-up. It really is. I do think that down the road, barring any escalation of geopolitical events, which is always, impossible to predict, I do think oil ticks lower. I think we're going to see a 6 handle sooner rather than later, again, barring any sort of geopolitical event. But, you really do have so many factors on both sides of the aisle here, right? You've got the geopolitics. The most recent is what's going on out with all of the shipping containers pretty much being halted right now. So that's number one. You've got Russia deepening their cuts. Now, I'm not so sure how much that affects the marketplace, because I think a lot of that is factored in. But you also have, OPEC cuts. And then on the other side now, you've got the demand destruction, and I call it destruction, out of China, and record production right here in the U.S. So it is really, this give and take. But I do think the fact that this demand destruction coupled with our record production wins out in the end, barring any sort of geopolitical escalation.
So, Scott, we could see more pressure here on crude prices, saying a 6 handle here at some point. Are we going to stay at that level, or taking a look maybe with a longer term view? How do you see some of the factors if we do see this return demand, or obviously the million-dollar question just in terms of a escalating conflict here in the Middle East or elsewhere, how that could then eventually drive prices higher?
Yeah, so I really believe that if there's an escalation, the geopolitical premium, if you will, is probably $5 to $10 a barrel. So I would look at, 78 to 80, let's call it, being an absolute top. But I don't think we get back there again unless there's something that happens. I do think longer run here, we see this 6 handle until something starts to shift out of China. Because again, we are producing more and more and more out of the Permian. That's why you're seeing companies, in these big transactions like what Oxy did last week. Not only are they producing more, but they're getting more efficient. They're doing it with less rigs. So the efficiency at what they are producing is at record levels as well. So to me, everything is pointing to a lower price per barrel here. Obviously, you also have the weakening dollar, which has helped commodity prices, because we know the dynamic there. So big tug of war, but I really believe the trajectory is on the downside.
Well, the acquisitions that we've seen over the course of this year, will they be net positive for that price per barrel?
I think they will actually wind up being net negative because of the efficiencies. But as I was reading through and really understanding the Oxy transaction, they look at longer term a sustained profitability around $50 a barrel. That's kind of their benchmark. That's a long way down from where we are right now. So I actually think that this is going to be net negative for the price of oil, but they're going to be able to produce more efficiently. Their margins may actually get better.
Scott, we certainly have seen an uptick in M&A when it comes to the energy sector here over the last several weeks. Looking ahead, though, to what that future consolidation will look like and ultimately how that's going to impact the price of crude down the line. What do you see there?
I think we're going to continue. The big players in the marketplace, the Chevrons, the Exxons, Oxy, they're doing this because they know that the competition is getting smaller and smaller and smaller, and they need a piece of it. And they really see that the Permian and production here in the U.S., they see the efficiency of it. Now, are they getting to a top perhaps? Are we at maximum capacity in terms of production? We're probably getting there. But I think we're going to see more and more consolidation, because some of the smaller players in the marketplace look at this also and say, boy, if we don't get ourselves out there, if we don't make a move and maybe get acquired by some of the bigger guys in the marketplace here, we may be left out in the cold.
Are the days of oil having a profound impact on the inflationary picture behind us?
Temporarily, yes. Unless inflation starts to rear its ugly head again, if we start to see some really bad prints, if PCE starts to go up, not just with the report we get later this week, but month over month, then yes, that can happen. But that seeing gasoline prices now at a national level of almost under $3 a gallon, compared to where we were at four and a half a gallon just a year ago, boy, that's a huge amount of inflationary pressure that's off. I can't say we're not going to get there again, but imminently or within the next few quarters, yeah, I don't see that at all. And I do think that helps ease that inflation worry.
All right, Scott Bauer, always great to get your insight. Thanks so much for joining us here this morning. Prosper Trading Academy CEO.
Thank you guys
Thanks
very
so
much.